Hello everyone and welcome into the channel. My name is Brent, and in today's video we are going to go ahead and quickly cover today's market pullback, the effect or what had affected the markets. As you may know, we'll take a little bit of a break to take a look at some of the sector performance year to date, and then jump into doing a comparison from the M1 Finance portfolio versus the S&P 500. It has been a minute since we've kind of reviewed that, and then we'll go ahead and do some ending notes. So with that said, if you guys are brand new here, definitely go down below, subscribe, and give this video a big old thumbs up. Would really appreciate it. Yeah, let's go ahead and get started. So over the past few weeks, I didn't make a video last week, but I've definitely been eyeing and paying attention to the market quite a bit more. I've been asking at least daily or every other day within YouTube or Facebook, kind of posting different things to kind of get a meter for people, where viewers, subscribers believe the market will go. I was interested in where people are buying stocks. Looks like it was pretty split between, people kind of holding on cash. Yeah, people primarily are kind of holding on the cash. If you guys see some of the votes out there, go ahead and vote on some of the post. What are they called? The polls. I know YouTube doesn't do a great job sometimes of showing it, but if you see a poll out there, definitely partake. That would be awesome. Last week, the S&P 500 dropped to a point of 590. Put out a poll to see if there was more downside. Bulls got back in control, or if we would kind of bounce around a bit. Definitely more downside. With tariffs coming in and just volatility with how the market, inflation, right? There's a bunch of factors out there that are more negatively impacting the market than positively impacting the market. So we've been having some pretty hard hits. So this is from 4 days ago, where on a day it was down 1.59%. And then I asked a question about what investors are using to track their dividends. I use the dividend tracker. It's actually a really cool little tool. I also use another website, but dividend tracker is definitely really good for tracking dividends. And then here is today. So going into this week, this was a Monday before the market opened. I put this out 22 hours ago before I went to bed. The S&P 500 was at 5,954. What is everyone's kind of move as far as where they believe the market's heading? And right now, as far as investors are going, the market is looking to have more downtrend, especially with tariffs taking effect on Tuesday. That is not going to get postponed. He's going to, President Trump's going to go full throttle with it and enact those against Mexico, Canada, and such. So that's going to definitely be dragging down the market here in the short term, which could be provide a buying opportunity. So, as of today, we did see a lot of that happen. Nvidia falling over 8%. That was the headlines today. Let's pop over to the market. Yeah, stock market today, S&P 500, Dow, S&P, everything pretty much dumped along the day. Here we saw that the S&P 500 fell 1.7%, posting its worst day of 2025, erasing all of the year-to-date gains for 2025 as well. We also saw Nvidia drop off a cliff, down over 8%, ending, I believe, 8.5% it had said. And then we saw all of the Magnificent Seven stocks declined. So the Magnificent Seven, of course, let's go look at the 1 day here. You have your Microsoft, Nvidia, Apple, Amazon, Google, Meta, Tesla, right? Those are your 4 + 3 7 Magnificent Seven. So these ones on the daily today affected the market. When you're taking a look at the S&P 500, I believe it has 506, 507 individual stocks within it, but the seven Magnificent Seven consist of around 30% of that percentage. So these companies have a big effect in the market when it's negative, and these, as well as financials and energy was down this week, utilities or today. So a lot of that just really helped push the market to its biggest loss in a single day. Now, these are pretty big hit year to date. I believe Tesla is down 30% year to date now, but we see across all seven outside of Meta, Magnificent Seven, they are year to date, they are negative. So we got Microsoft down 7.83, Nvidia down 15%, Apple down nearly 5, Amazon 6.5, Google McDougal 11.44%. I would really like to see Google below 150. I don't know why I said Apple is staring at that one. And then Tesla has got beat down nearly 30%. Meta, really good earnings. That has really helped propel them higher, keeping those gains for the year, up nearly 12% on the year. But if we take a look at the 1 year performance, these are still very positive outside of Microsoft down 4.72. So I believe Microsoft is actually looking really interesting. We'll have to take a look at that one in a separate video, but Nvidia still up nearly 50%, Apple 31, Amazon 18, Tesla 40, Google 23, and Meta up a whopping 35%. I did a couple years ago, I swapped the majority of my Meta once it had recovered over to Apple. They both had really good recovery, they've had good performance over the last few years, but I believe Meta over the time frame, like 3-5 years, has just blown Apple's performance out of the water. So yeah, we did have the headlines here, just kind of market or the tariffs. So it is going to go into effect on Tuesday. I don't know if that's mentioned in here. I believe I read that. Yeah, Tuesday. Nope. Yeah, right here. So tariffs against Canada and Mexico are set to come into effect on Tuesday, after Trump said levies against both countries are set to fly. Yeah, leave. I'll set as they go into effect tomorrow. Yeah, that's the biggest concern right now, dragging the market down. Those are going into effect. So it'll be interesting. I'm really hoping for some more red. I would really like to have the S&P 500 drop a bit more to the downside. If we take a look here, it's gonna be blinding here. Sorry about that. I can't just type in here S&P 500. All it shows is the. Oh wait, we do have the end here. Does that show it? Yeah. Okay. Cool. Let's go ahead and get rid of that one. Total return level. I don't need that. And there we go. We want that 50-day to. I guess the 200-day shows up, but the 50-day. Oh, must have. It's just easier to see with SPY. So we're going to be using SPY for this example, but you can see here, back in the past, 583 had been a good sort of floor, support. I believe at one point back in early January, the S&P 500 had actually dropped to about 581. I believe I picked it up at 578. So it actually dropped below. It was 577 on a low, I believe, back in January. I picked up some amount of shares back during this dip. I held on to them. I did do a call option, and I sold out of all of my S&P 500 at around $607. I did convert that all over to SPY as an income sort of ETF income, premium income, but I'll share with more on details here of that on the future. But I'm still holding a good majority of shares that are monitoring the S&P 500. I do believe that there's going to, I don't believe it'll hold off right here. I would like to see even 200-day retested or just come down and hit that 200-day. I don't believe that will actually fall and collapse and have much more downside. We're already down. Let's pop over here. From top to bottom, I believe we're down around 7%. Oh, not even 7%. So yeah, from top to bottom, we're only down 4.79%. So while investors out there are kind of screaming and such, we're really not down that bad. There's been huge hits back, 2020, 2024, there was about over 10%. I thought it was over 10%. It may have been this one here back in 2022 then. but I thought we had one in 2023, but it's been some time since we've really had these big dips. Yeah, see, 2023, July into October, the market lost roughly 10%. In that time frame, it just was going down, down, down. I forgot what was taking place in that little time, but the market for a solid few months, about what, 2, 3 months, just trended down. It was pretty negative. And then President Trump went, no, 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 that was a whole other year afterwards. So yeah, the market just kind of silly, right? But let's go ahead and go into the M1 Finance portfolio performance versus the S&P 500. So we are at this. We haven't added any more money in the last 2 years. We've kind of talked about. Oh, I've talked about this in the past. What the new plans are for the IRA, Roth IRA accounts. They're mostly just kind of going to be set and forget. I am currently heavily invested in this account within SEHD, which has helped with the downside versus the S&P 500. If we take a look at the month of February, the money weighted return of the portfolio is up 3.15%. If we take a look at the 1 month performance of the S&P 500, it is down 3.12%. And if we take a look at the year to date, this is something that M1 Finance finally added in here, and I'm really happy that they did. I've been asking for this one for quite a while. They do have a year to date now, so we can see year to date we are up 4.7%. So we're maintaining our gain so far year to date, and that is mostly because the SCHD is not as tech heavy as the S&P 500. You know, S&P 500, 30% of it is those big tech heavy companies. So if we take a look here at FinViz, where is it? Right here. If we take a look at the year-to-date performance, the technology stocks are pretty hard hit, right? But the rest of the market, consumer defensive, we have our utilities, healthcare, financials, industrials, they're still fairly green. So it's a good little bit right here. I would still like to transition SCHD to something more like VU long term, and I may end up doing that. Just kind of transition these, not really touch them. The capital in them can't really be used for living expenses, right? This will be kind of like a set and forget, and then sometime when we're 59 and a half, 60, we can transition these to some sort of income producing portfolio, investments, and then just live off the dividends, not so much off the equity, but the dividends that they produce at that time. So this is still 20 years. I'm not near 40s yet. I'll be 40 this year in May, and my wife is still she's 35, I believe. So we still both got 20, 25 years up until this portfolio fully matures. So if we just invest this into the S&P 500, don't touch it again, it could reach $500,000 potentially by that 20-year mark. I haven't done the math, so I'm just kind of rolling it off the top of my head. But definitely just one portfolio, just kind of set and forget and leave it be. We're being active in our taxable accounts more these days. But yeah, that's the year to date. We'd already covered the 1 month performance. We've covered the year to date performance versus the S&P 500. Right? Yeah, we did that. As far as the activity goes, we do have our monthly pairs. We have Main Street Capital. We have Realty Income that are our monthly producers of income that's just being reinvested. We have our quarterly dividends. Abby, one of our biggest quarterly dividends of $13.43, and Apple, a nice, humongous $4.24. It does look like M1 Finance lends out, which is kind of cool. I don't think I paid attention to that in the past, but they, yeah, interesting. We got 41 cents there from security lending interest, and then from those dividends and interest, we got $35.26. Now, I currently have SCHD as the majority percentage of my portfolio, so until it reaches that percentage of the portfolio, it's going to fully invest 100% of the time into that. I think what I want to do, those are the dividends for February. So kind of talked about the gain loss February, best performers, obviously, for the 1 month. Definitely not Main Street Capital, but Abbey done well, Essex Property Trust. Realty income. So REITs have done really well, and AbbVie Pharmaceuticals, pretty interesting there. So as far as future strategy, what I would like to do with this portfolio, this is my wife's, but I have a IRA, Roth IRA. I'm going to be signing up for Robinhood Gold. I reactivated my account. I'm going to be transferring. I believe I have to make the gold, the account gold first, and then transfer the capital into it, and then they'll match 2% of the transferred capital into the account. So that's the plan there. On the M1 Finance account, I do plan to transition this. Maybe when I see some more recovery, I'll end up selling all of the individual companies here. I don't want to hold any more individual companies within here. I'll just transition all these individual ones over into VU. That's the main one. I don't want to hold SPY or VTI is fine, but I can pick up some VU. It's got a very low expense ratio versus, I believe even VTI has a very low one as well. I think VU has a 0.04. Let's see. Good. If I logged into my broker, it'd be faster. I don't use this to gather data. I usually just go through the broker. I don't have that pulled up right now. I thought it showed up in here sometimes, but it may actually show up within here. Well, been a minute since I've actually used M1 Finance. So I don't even know where to type in. I'm looking for like a little magnifying glass that you can usually, it would just buy. Oh, that doesn't work. Well, I have to go and look how to do this. But that's something I'll have to figure out later on. But yeah, plan is to transition the holdings over to VU and just let it sit and reinvest into itself on a quarterly basis. That's kind of the plan going forward. Kind of very similar to like a Roth 401k, 401k work plan. You set it and forget it into some sort of fund. In my case, I usually track the S&P 500 even in those, and then just kind of set it and forget it. So I think that is a good recap of the markets going forward. I don't see the markets falling off a cliff. Like, yeah, it is red right now, but I believe we'll hold strong. It'll retest right about 575, 580. It may even, it might hit 570 even, but I don't see negative long term, right? These tariffs, they're going to go into effect, and you may feel the effect of them, but I don't know, there's a lot of other things out there too. With inflation, there's layoffs and jobs, and then market kind of stagginess with the housing markets. Prices have been stagnating and even dropping in some cases in some areas around the US. So it'll be an interesting time. What If you guys would like to share down in the comment section below, what has your performance been for the month of February's? Are you guys deploying any sort of strategies in your guys' portfolios? Are you guys transitioning any sort of ETFs around, individual companies around? Making any sort of adjustments and changes, right? Are you increasing allocations now that the market is falling? Are you increasing your cash reserves? I did go ahead and do a post. I've been trying to post more active on Facebook and YouTube, but also on my website, Investing on the Go, trying to come up with different articles that could be beneficial for, budgeting, different sources of income that individuals have, right? A lot of people have their W-2 income, but other types of income that are very popular include stock market dividends, right? That's one that I think everyone out there that watches the channel is really already heavily invested. Yeah, investment income. Other sources of passive income could be from royalties, or I've seen a lot of videos of individuals selling on Amazon KD, I think it's called, and Etsy and stuff like that. Obviously, if you have a real estate business or other type of business, you can You can get some sort of passive income through there, freelance income. So I could create a bunch of articles here. I've been trying to create more articles transitioning to kind of be helpful in ways during these times, right? How to plan for financial goals in 2025. So if you guys have any sort of feedback, comments, questions that you guys are interested in getting more information on, I may not always be creating YouTube videos every other day, but I'm definitely creating some kind of content out there to help individuals answer questions and either get started in investing or fine tune their investing. So that is going to be it from me. I do appreciate everyone tuning in. If you guys have any comments or questions, I will definitely try and answer them, or I will answer them in the comment section down below, or make a future video answering those questions. So that is going to be it for me. Appreciate you guys tuning in. Be sure to go down below, hit that subscribe button, make it blue or gray, and then hit that thumbs up, okay? Bye-bye.